Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Good morning. Welcome to the Max Out Savings Show and Happy New Year. Start of the new year, start of 2025, and we have a lot to talk about here on the Max Out Savings Show. We're going to be talking about savings, investments, your retirement, our outlook for the new year. What are we facing? Where are we going? What are the investment markets going to do? And we're all going to be discussing that, what's going to happen. We're going to try to bring that to you, our outlook for the new year. We'll be talking about it here today. The Max Out Savings Show is one of Houston's longest-running radio shows. It seems like it's almost 19 years now. I think we started in 2006 on the radio, and we have thousands and thousands of loyal listeners now, and we appreciate it. And so, and our motto and our philosophy is to save aggressively and invest conservatively. That's save aggressively, invest conservatively. That's the key to building up wealth over the long term. And particularly in the world today where we have $35 trillion in debt, we're borrowing $1 trillion every 100 days. You're not sure you can depend on the government for your retirement, so you have to take charge of it today. You have to take charge of your savings to make sure your family is protected. That's why we came up with the save aggressively, invest conservatively philosophy. And so here we are today. Look, it's the start of the new year. Now's the time to make sure you're saving enough money. If you're not, there's lots of opportunities for you to build up wealth. But you got to do something. You have to take charge of your retirement. You have to save money in your 401k plan, your different types of qualified plans. You have to make a decision to save money, build up wealth, and become wealthy. It's a conscientious decision, and it's the start of the new year. Now's the time to make that decision. Now's the time to change your life. So call your HR person up, increase your savings at least. It should be 10%. A lot of these places, if you give them 5%, they'll match 3 or 4 or 5, 6%. If you put in 6%, which is if you put away 10% and the company gives you a 4% match, that's a 40% gain on your money. Where else are you going to get that? I mean, if I sat and promised you that you would get a 40% return on your investment, the line would be from here to Dallas wanting to sign up, and yet the companies are giving you that opportunity, and some people don't take advantage of the free money. So remember, save aggressively, invest conservatively. That's the key to building up wealth. The savers, people that save money and build up wealth, they're the people listening to the Max Out Savings Show. So what do we do? It's 2025. Here we are, start of the new year. Where do we go from here? And there's a lot of opportunities in this market. But by the way, before if you sit there and put your money, you start saving money at $8,000 a year. At age 25, you contribute $7,000 a year until 49, and $8,000 from 50 to 65. With the 8% annualized return, with a 25% marginal tax rate, you're looking at the difference of about $700,000 in wealth by putting your money in a qualified savings plan. That's about 60% more funds. I mean, this is the power of compounding money is truly extraordinary, but the power of tax-free compounding of money is unbelievable. And this is why Warren Buffett purchased an insurance company so he could hide his gains and shield them from taxes. So anyway, make sure you're taking care of that plan. Make sure you're saving money, building up wealth. It's a new year. Take advantage of it. Make this one of your resolutions. Now, where do we go from here? This is kind of the interesting thing in these markets, and I think if you look at it, it's a situation of you had what was viewed by many as a good year last year in the market, but it was a very volatile year, and it was very much concentrated in the technology stocks in a few big mega cap stocks. If you look at the top 10 stocks, they make up about almost 38% of the total market capitalization of the S&P 5, actually almost 39%. And so it's a very concentrated market, and these stocks are at about 145% of PE above their norm. They're very expensive, and so and if you look at another way to look at this market right now, at the end of 2024, the bullish percent ratio was 41%, which for a big year in the market, that shouldn't be happening. It should be 80, 60, 70, 80% or more bullish in this type of thing. And so it's a very narrow market. Bullish markets, they're not. Big bull markets that are successful are broad bull markets where everything's going up, not just a few highly selective mega cap. But honestly, what makes it so dangerous is the huge capitalizations, because they're giving a false impression of that the S&P is actually doing. The bull market is better than it is, and it isn't. I mean, 41% bullish means almost 60% of the stocks are in downtrends in this market. So you have to understand that. So we keep repeat. Look, I think one of the big things for 2025 is really going to be the technology stocks at some point have a pretty substantial correction. The valuations are sky high. Their fundamentals, if you look at the number of cars they're selling with Tesla, if you look at the privacy issues, the monopoly issues with Apple, Google, Microsoft, Meta, are huge. And there's other competition coming into the market. AI is not going to be the big positive for Google and Meta and some of these other companies, because with AI you can build your own Facebook, you can build your own, you can go pull things off of the internet. I don't know if you try to get some information on the internet nowadays, pull up a subject, you get it up there. You go to Google, you've got to wade through tons of paid ads and paid placements, so they take you to the website that doesn't really answer the question. If you ask Grok, which is X's AI, they'll just give you the answer, and it's really surprising. And so, who wants to sit there and read through? If you want a simple answer to something, what time does the football game start or whatever? The AI is going to be much better, and you're not going to have to wade through all the garbage that Google and Microsoft want you to get through. Their paid ads, their paid placements, and their paid positions on the search engine to get your information. And so that's number one, is the fundamentals are deteriorating in these companies. They're spending enormous on AI. We don't know how much the payout is going to be on it. In addition, the market caps in these companies are absolutely gigantic, as we've talked about. If you look at Apple was closing in on almost $4 trillion market capitalization. As we said in the show, look, nobody even knows what $1 trillion is, and I think that's a fair assessment. I won't say nobody, but I'll say 90+%, 95% plus the people can't tell you what $1 trillion is. The number is so big, and yet we're just spinning these numbers up. Look, for 2025, we think the tech sector is going to run into problems. We think there's going to be AI. There's going to be issues with AI. We think there's going to be issues with competition. We think there's going to be issues with monopoly, antitrust issues. We think there's going to be actually, we think AI could compete against a number of these companies, and so that's one of the big things that we're really looking for 2025 of one of the things we're doing. The other thing, what are some of the other ones we're looking at? I don't think the inflation is going away until the market has a substantial correction. Interest rates are moving higher. If you look at the charts on the 10-year. On the 10-year bond, its 10-year Treasury bond for 2024. Interest rate. Look, what was the theme for 2024? At the beginning of the year, the theme for 2024 was, wow, this is great. This is the year the Fed's going to be cutting rates 4 or 5 times. Rates going to be going down from 5.25, most likely down to 3.5 or lower. The long bonds going to be, interest rates going to be dropping there. There's a lot of exciting things happening here. But if you look at what actually happened, the yield on the 10-year bond started out about 4%. It's at 4.6% right now. So interest rates went up during that time frame. The short-term rates went down about, they're down about 4.25, 4.34 from 5.5 They're down some, but it doesn't account for everything else past about 2 years. Well, back to about 18 months has gone up. Yields are going up. Why are they going up? Because we're borrowing massive amounts of money. So look, here's one of the big issues for 2025. We get the new president coming in, Donald Trump. Look, this is one of the most exciting. I've been saying this. He has the most exciting, game-changing cabinet since I've been saying since JFK, John F. Kennedy Jr. Look, I think he's got the most exciting cabinet possibly we've seen. And you maybe have to go back to the Roosevelt administration. He has huge game changers. He has people who want to do something. Things are going to change. But they have to do something. But Donald Trump is coming in. Joe Biden is leaving the president with the United States finances in complete shambles. We're borrowing at over $1 trillion every 105 days. The Treasury under Janet Yellen shoved all the short-term borrowing under about a year. It shoved it all. Typically, it's about 15% a year is short-term borrowing. She moved it up to 30% of all the borrowing was 1 year or less, which means that has to be refinanced this year. We're going to have to refinance $7 trillion. This is why the long bond keeps going up. People are going, hey, do I look stupid? I'm not buying these government bonds. You guys are printing money as faster than anyone can even imagine. We know these things are going to become worthless. Interest rates are going up. How are you going to refinance? This is twice what we had to refinance in 2024. Why did Janet Yellen do this? She wanted those long rates down ahead of the election so Joe Biden would be reelected. It didn't work. The American people saw through Joe Biden and Kamala Harris and the rest of the, clown network they've got there. And they've looked at this and they've seen, oh my gosh, we need a change. We want to change. And they've got to change. But Joe Biden is turning the presidency over to Donald Trump, and our finances are a disaster. Instead of borrowing $3.5 trillion, they have to refinance and borrow. They have to refinance $7 trillion. Where's the money going to come from? And that's why these long-term rates are going up. This is why rates are going. Rates are going to go up until the economy slows. The three things: the economy slows, the stock market has a very substantial correction, or the third one is Donald Trump comes out with a very aggressive plan to cut costs, grow the economy, and massively reduce regulation to improve productivity so you can grow the economy without... Look, there's only a couple ways you can grow the economy. You can cut taxes. The problem is we have massive deficits. It makes it very difficult. You can cut borrowing. Janet Yellen basically just, demolished Treasury, so they can't do that. Or you can grow the economy through productivity. If you reduce massive amounts of regulation, you can recharge this economy, get it growing, and we can grow out of this. So it's one of those three things. But these rates are going up until that happens. And so this is what you're going to see. Look, we're coming up on a crisis pretty quickly where President Trump has got to make these big changes. They have to be put in place, and that's what we're going to see happen. This is why this is why 40% of the stocks are bullish. That means 60% of the stocks right now aren't bullish. This is why interest rates are going up. This is why since the Federal Reserve started cutting rates, back in September, interest rates are up almost 100 basis points. And that's the first time that's ever happened like that. The last time it happened this much, it was in 1983 when interest rates were 2 or 3 times as high and 1% wasn't as big a deal. This is telegraphing that the Fed made a mistake. Again, the Fed came in, supported Joe Biden, cut rates like he wanted to do, and now people are going, uh-oh, this was a mistake at the Fed. Rates are going up. So how are we going to rectify this situation when Trump comes in here in 2 weeks? This is what we're going to have to find out. This is why the market's worried. This is why interest rates are going up. And this inflation's coming into time. All of these things are not real positive for the stock market. We'll be right back after this break to explain this and see where other areas where we're going from here.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400 or visit maxoutsavings.com.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. I'm Ted Gioka. We're talking savings, investments in your retirement. You can call us up at 713-339-1070 here at the show. On Saturdays, we're live. On Sundays, we repeat at 4 p.m. And by the way, I want to mention another one of our sponsors, which is Rangoni Alto Gin, which is a high-mountain botanical gin with the finest botanicals, organic botanicals in the world, produced in the Italian Alps. You can get it at Specs and other places out there. It's Rangoni Alto Gin. Look for the kingfisher bird on the label if you want a fine botanical gin. Looking at this market, again, what's our outlook for 2025? And as we said, the big thing for 2025 is the Trump administration. They're coming in. They're game changers. These people, if you look at the people Trump's putting in charge of things, they're not people that are getting, maybe some ambassadors. But even the ambassadors, these are can-do people. These are game-changing type of people. If you look at Elon Musk and Vivek is in the Doge Commission, which is going to reduce government efficiency. They're bringing in very smart people. If you look at Tulsi Gabbard, if you look at Pam Bondi, if you look at all these people, if you look at RFK Jr., these people, they want to make big changes. There's talk the first day they're going to have an enormous number of presidential orders coming down. They're going to be changing regulations, doing things, making a difference. These are big game changers that are happening. And so it's a new administration, and they have a mandate from the people. And by the way, it is a mandate. You know, one of the things, Jimmy Carter passed away recently. People forget. Jimmy Carter was elected. He was a governor from Georgia, of course, but he was a submarine commander, Navy, very straight-laced, deeply religious. He came in after Gerald Ford and after Nixon, where people were fed up with the corruption in the administration. They wanted a person that was going to be a straight shooter, honest, very honest person to come in there. Jimmy Carter did his job. He basically restored faith in the presidency. Things didn't go well, as you know, on the inflation front in some other areas, and they wanted a strong leader. After that, they got in Ronald Reagan. The American people put Ronald Reagan in there. If you look at, and then they got, you know, things went well under Reagan. They brought in Bush, and then you had Clinton come in, and you had Bush come in, and then you had Barack Obama. Barack Obama was a first-term senator with radical tendencies, hung around communist and socialist, and had no business near the presidency of the United States of America. But the American people elected Barack Obama. Was it because he was a brilliant person, a great oratory? That helped. I don't think he was that brilliant, but the reason was he was African American. And what the American people wanted is they felt like, hey, this was time. It's time that we put this race issue behind us, and it's time to make an African-American president. That's what the American people fundamentally, if you look at presidential elections through history, they always seem to do the right thing and pick the right person for the times. And if you look at Trump came in, the people that were sick of the corruption, they brought in Trump. They were sick of the border. But honestly, I don't know what to say about Biden. You look at you look at that election on so many levels, and it's really suspect. We'll just leave it at that. But here comes Donald Trump again. They threw everything they could at Donald Trump. They charged him with felonies for jaywalking and everything else under the sun they could get. They basically, Trump was not a perfect candidate, but the American people wanted a person that was going to clean up Washington, the corruption, the crony capitalism, where basically everything. Honestly, looking back, 20 years ago, I should have done nothing but start businesses to profit off of the government, because that's where all the money has been made. Getting contracts from the government, getting special deals from the government, and people are making billions of dollars off the government, and the American people are the last in line. It wasn't just immigration, they want this cesspool in Washington, D.C. cleaned up. That's what the American people did. Donald Trump has a mandate. This is what these people don't understand. They're like, we're going to stop Trump. We're going to sentence him coming up. Now, this isn't Donald Trump. This is the American. This is the American people made those. They voted on that election, and it was across the board. Actually, surprisingly strong victory for Donald Trump, and across the board. And so he has a mandate. He has a mandate to clean things up. These guys, look. You're talking millions of dollars. We're talking a lot of very greedy, power-hungry people in Washington. They're not like H.W. Bush that lost the election to President Clinton and goes down to the Oshmans and buys a fishing reel, letting everyone know he's going to take a break. And these people aren't going to give up anything. They're not going to give their power up, and they're not going to give their money up. It's going to be a battle, and you're going to see this come up. The Republicans have to stick together like they did with Speaker Johnson. They're going to have to pull everything together, and they have to push this stuff through because there's an enormous group of people, and it's not just Democrats behind that they're trying to stop this. And so there's going to be a lot of back and forth, moving back and forth, a lot of issues, a crisis. If the market plunges when Donald Trump gets in there, all the better, so they can go, hey, look what we told you Donald Trump was horrible. You should have stuck with us, and you'd have gotten your market up, and we would have continued to make our billions, and everyone would have been happy. But So this is not going to be an easy thing. I want you to understand it's a battle. Donald Trump has put together a very powerful, very dynamic group of people, and on the other side, they're very powerful, they're very rich, and they're not going to give up easily. And so you're going to see a lot of swirling cross currents. You're going to see crises and things like that. That's going to be an issue. That's why these 10-year bonds are going up, because people aren't sure what's going to happen. The borrowing is out of control. So expect big things coming up, and we need to see them move quickly on these issues, one of them after another. You got to get approved your people. You have to get them in there, because remember what happened last time. Donald Trump came into power, and it was going to be Speaker Paul Ryan and head of the Senate, Mitch McConnell, were going to be the adults in the room, and they were going to control Trump. And where did that get us? We had the House, the Senate, and we got nothing. We didn't get. Joe Biden came in with one of the tightest margins, almost as tight as we have now, controlling the House and the Senate. He got all types of stuff done. It was one thing. I mean, say what you laugh at Joe Biden, but the people around him put in an enormous amount of stuff, didn't have much to do it, but they all stuck together to get the job done. Now it's the Republicans need to do that. They need to clean house in Washington. So look for those things. So a couple areas I think are going to be interesting is going to be the as we said, look, inflation's going to still be there. I think one of the things we're going to be looking at is going to be energy. What's going to happen with energy? Now, this is where I deviate with a lot of people on Wall Street. They're all saying Trump's coming in, it's going to be drill, baby, drill, and they're going to flood the country with oil. If you look back on a chart of oil over the last couple years, it's really traded 2019 to basically 2015, just because this is the chart I'm looking at, it went from 45 to about 73. Well, since then, we've had about 30% inflation. And so if you look at that, that probably gets you a bottom, and it's traded since that inflation's come out. The bottom's been about 65 up to about 91 during one of the Russia war. It went over 120. I think it's going to hang in here pretty well in the 70s and hold up pretty well. I think most oil companies have realized if they drill, baby, drill and flood the system with oil, it all goes to $40. Nobody makes any money. They're much more driven for shareholder value. They're paying out their cash flow on dividends and stock buybacks, not drilling more holes in the ground. The other thing that's happening is, as we said, there's going to a lot of executive orders come out. They're going to do a lot of remove a lot of the regulation in the oil and gas business, which is going to make their businesses more profitable. And so we like the oil and gas sector overall. Interesting sector that looks pretty good in here is natural gas. Natural gas in March and May, it bottomed went to 150. It was about 175. To put that in perspective, this year, that's probably where inflation-adjusted oil was trading in the 1950s when it was at 25 cents an MCF. I remember drilling wells in the late 1990s. If we got $3, we were happy with the gas, and then if we go $4, we do real well. Here it is 25 years later, and it's $3.30 right now. I think natural gas is going to be a good place to be. U.S. has huge amounts of natural gas, and right now there's a lot of overproduction. That's going to go away. In long term, this is going to be a good place. We like the energy sector. We like the natural gas sector. We like with the amount of money printing, the precious metals, gold and silver. I think gold's top for a while. I think silver makes a run to 50 this year. I think the gold stocks and the silver stocks move higher because they pull back so much in here, kind of corrected a little bit. Look, it's two things. Either the United States, if Trump gets in, they get control of the spending, they reduce spending with the DOGE program, with other programs, they get the economy going, and interest rates fall. As people get confidence in the United States again, interest rates fall. That's going to be bullish for gold. That'll drop the dollar. That's going to be bullish for gold and silver, for both of them. if they don't, if this thing spirals out of control, the Federal Reserve is going to monetize the debt, and gold and silver are going to go to the moon. As we said, we don't see oil. Look, oil fell last year. We're not looking for that to happen this year, and so I think that's kind of what we're looking at. Those sectors we like, the general mining sectors, in commodity sectors, I think they're going to do well in here. We're looking at a reindustrialization in the United States. That's going to be very positive. So all of these things, this is what we're going to. I think a lot of industrial stocks are way down. Looking at some numbers, they're very cheap. We're looking at there's a lot of stocks. One of the things we said. Right now, the market had a great year last year, and it ends with the bullish percent ratio at 40, which is. That simply means that the majority of the stocks are selling off, and this is creating opportunities. Another opportunity is going to be RFK Jr. RFK Jr. is one of the biggest game changers, probably the most brilliant stroke President Trump pulled off. As we know, he called up RFK and offered him a position within hours after an assassination attempt. I think within a day or two, he actually, like the next day, he flew up and met with him for 3 or 4 hours, got the deal done. The Democrats were absolute fools. RFK basically was sitting at one of their the food and the chemicals and drug issues. These were big issues for the American people. Nothing was happening. And the Democrats lost it, and now the Republicans have. He's going to be very popular. If you look at Gavin Newsom, he's already out in California laying out his case to clean up the food industry. That just shows you how concerned they are about RFK. So to tell them to hold through the break, we'll get you just a second. So looking out, he's going to have a lot of power. I would be shocked if he's not approved. He's going to have a lot of power because remember, if you're a Democrat, Pete, you're going to have to answer to your constituencies. Why did you stop RFK, who's trying to get rid of autism and clean up our food supply and make food great again? But he's not real positive for the food industry. He's not real positive for the drug industry. He's not real positive for the chemical business, and so there's a number of sectors that really they're going to have issues with him coming in because they're going to be looking hard at these issues, and so and the farm industry is another one. They're going to have to clean up a lot of the food, as we talked about on the show. People claim they're allergic to gluten, but if you go over to Italy and eat pasta and all, bread and everything else, people have no problem over there with these different things. Well, gluten is in the wheat over in Italy is the same as it here, so it's something else that's making people sick, and they've got to straighten this stuff out. So that's creating opportunities. We're looking at, quite frankly, at some food stocks or different stocks that are just way down. Some of these things I'm looking at, they're the same place they were 5-6 years ago with some pretty good growth, and that's going to create opportunities to pick the right ones. The drug industry, I don't see how. The easiest thing in the world to save money for the government is start negotiating on drug prices. I mean, the drug industry has been very shrewd in controlling, hey, we're going to negotiate on 3 drugs this year, 4 drugs. This is ridiculous. We're paying sky-high prices for our drugs across the board, while people in Europe and Asia are paying materially less for the same drugs. Many of these drugs, by the way, are produced in those countries. RFK Jr., he wants to move all the drug manufacturing back to the U.S. A lot of this stuff is in Puerto Rico, is in Ireland for tax purposes. Why in God's name are we sitting there letting these people move over to outside the United States, take jobs with them, and then give them a tax break to do it? These are very simple things. Once you sit there and put the American people first and the United States of America first, all these issues that these carve-outs that these big companies have created, they're going to start falling away. And the problem is, if people vote against them now, they're going to be dealing with RFK. They're going to be dealing with Vivek. With Elon Musk, they're going to be dealing with very popular people and Donald Trump standing up to them at the same time. We've got to cut expenses because the American people can't afford the debt. And why should I take on debt to support Pfizer or some other drug company so they can produce their products in Ireland and not pay any taxes? These are big game changers, but that's also going to create opportunities into 2025. Tell you what, we're going to be right back after this quick break in the Max Out Savings Show. If you've got a question or comment, 713-339-1070 here in the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, and your retirement here on the show. If you got any questions or comments, 713-339-1070. I believe we have a phone call coming in. Welcome to the Max Out Savings Show.
Hey, Ted. How you doing today? Listen, your topic on RFK is pretty amazing because just got back from Europe and the UK, and one of the things one of my sons was doing was he was comparing ingredient labels on things like soda and other products, and it's shocking. The European and UK Coke and Pepsi products have substantially less sugar than the U.S. products do. And they're using sugar over there. They're not using this GMO corn syrup that we're being poisoned with over here. Just wanted to bring that up, and it's exciting, and the medicines are cleaner, and just really, it's going to be really exciting with that. And I'm sure you're going to be able to have some really good companies for us to look at in the future on this. That's all I had.
Yeah, thanks. No, I think that's a good point. I mean, clearly there's some real issues. We spend 6 times the amount of money for health care as the Europeans do, and they're living longer, okay, which is like really, but this is a big deal. And I think this is going to create opportunities in the food sector stocks. And one thing, look, you can bet they're already working on changes to this. But it's really fascinating that the sugar Cokes here are very popular. They have to import them from Mexico, and someone's telling me they're like the sugar Dr. Peppers, and they're hard to find because they're running out of them constantly. And so it's pretty interesting to see how this is going to play out. I think RFK, to me, is fascinating because he's
substantially better too.
Yeah. I think you're going to see big changes coming up. And this is such a great thing for Trump because so many Democrats agree with this. It's one of the things that we can really get kind of commonality on. But good, thanks for the call. So this is, we're looking at the companies now that really are having big sell-offs, and some of these big companies you just can't get cheaply, and they're starting to come in. And I think that's one of the areas we're going to be looking at. I think there's just going to be a lot of turmoil the first 3 or 4 months, over the next 3 or 4 months. I think there's rising inflation, there's rising interest rates. The dollar continues to go up, and this is, keep in mind about 40% of the profits come from overseas, and the dollar, since the Fed has cut rates, has gone from 100 up to about 108. That's 8% move, and that's affecting corporate earnings on the S&P 500 around the rest of the world. This is one of the reasons we're seeing commodity prices sell off some, because these commodities are priced in dollars, and if it goes up 8%, that means your commodity's gone up 8% elsewhere, which causes somewhat of a slowdown. And so all of these things, rising interest rates, rising dollar, new president coming in, big changes. And you look at Biden's doing everything they can to sabotage Trump. Now, supposedly he's going to come out and forbid oil drilling on the Atlantic and Pacific coast. One thing after another. The United States has almost become a banana republic under Biden. The new dictator gets into the South American country, starts spending money, and he gets a call from the bank and said, "Hey, there is no money." And I think that's what we're looking at in the United States. As we said at the beginning of the show, President Trump has to move quickly and forcefully, and I think you're going to see it. The rising interest rates is a real issue out there, and that's telling you there's lack of confidence. And you can say, Ted, the dollar's going up, but the dollar's going up because there's a scramble right now for dollars to refinance and to lock in because of these rising rates, and it's kind of causing a global scramble. And that's going to change. And when it does, and particularly if they don't get the spending out of control, the dollar will start to collapse. And so that's what we're going to be looking at. We still like 2 years or less in treasuries. You can pick up 4.3%, pretty much across the board, 4.2% in treasuries. Longer term, we like high quality corporates. The corporates that, if there's a severe recession or something really goes wrong, are going to continue to make money, like a railroad or high quality oil company or something where no matter what happens, they're going to be in business, and you got to look at some of the funding issues there. That's the one thing that's fundamentally changing for us to some extent is for longer term. We're realizing you have to diversify to some extent out of treasuries, just because you want to have that optionality of high quality corporates to spread the risk in case something goes wrong, in case that something comes out of nowhere. When you're borrowing $1 trillion every 100 days, you got 36 trillion, you have $40 trillion at the end of the year. If this doesn't get under control, if something happens, if there's a war with China, you really want to spread your risk around. And the interesting thing is, you get paid a little bit more, but one of the things that caught our eye was how close Treasury yields were to corporates. And what that's telling us is high quality corporates. So even some of the stuff we're looking at is the smart money appears to be looking at the same thing we are, and they're coming in on those corporates. This is for big money because they're like, look, I'm not 100% sure, and just to be on the safe side, I'd rather own a Exxon bond, which we don't own any Exxon. Just as an example, I know Exxon's going to be around. Whereas if the government defaults, or if they do something, if things don't work out, and so this is, and again, if you're getting the same yield and you're just spreading your risk around a little bit, you should be okay. You don't want to be in something like a finance, a bank bond. Those things could get in trouble. There's just certain industries that tend to hold up This is something we do a lot of work at Max Out Savings Advisors, understanding how to manage things in a crisis and downturns. We're actually really good at it. That's why we're up for 3 years in a row now. In first year was a bad market because of those type of things, but understand. That's again, short-term treasuries, longer-term, 26, 27, 28 corporates. I think are better. These are high. Let me be clear: high-quality corporates. What our philosophy is look. If I'm going to own a corporate, I want it to be able to go through a severe recession without any problems. We wouldn't own junk bonds. The spreads are way too tight, and when things go bad, interest rates are rising. That's not the place to be. The sweet spot in the bond market right now, longer term, is high quality. Not high rated, but also you got to have to understand what's going to work in a crisis and what isn't, and that's the sweet spot, because you're not paying. The spreads are way too tight on junk bonds. These bonds are actually trading very close to governments, and that's telling me that big money is buying these high quality, almost depression-resistant type of bonds, and we're not saying that's going to happen. But if I can invest in those, it actually probably make a little bit more the same as governments. Why not be in some of those just to be on the safe side, because I'm making the same thing? That's the key. The key is investing for 1 or 2 or 3 years in the future. It's not investing for the next quarter of investing, and I think that's going to come out. I think what I just said is going to come out this year. Is there's too many people just chasing the hot momentum trade right now, and I think these momentum sector is going to sit there and start having real issues later in the year, and that's why I think value is the real play right now. There's a real dichotomy between stocks. I think the classic is almost Walmart. Walmart we've talked about the last couple of 37 times earnings. It was at I think 11 times free cash flow at the beginning of the year, in 24 beginning, and at the end of the year close to I think it was 19 times free cash flow, 37 times earnings. I got just a little less growth rate out of it for the next couple of years. I think in Academy, I'm paying 9 times earnings. They're buying back stock. They're paying a dividend. They're reducing debt. So, it's like, wait, I can go 9 times or 37 times. And that's, you just have to look at some of these opportunities. These big mega cap stocks, there's just way too much money indexed and tied up in these things. And the problem is, when this thing starts coming down, who are you going to sell when you start dumping $3.8 trillion worth of Apple stock? Who's the buyer? Where's the money going to come from? And it's going to come a lot lower, because there's not enough money in the world with these big mega cap stocks. And if they're going to have to sell that, they can only sell the small ones down so much, and then these big ones, that's the only place they can get money, and they're going to drive them materially lower. And so this I think you're going to see this for 2025. A couple other things. 401ks, they're increasing the maximum you can put in a 401k to $23,500. This is up $500. Now, the total you can put in the 401k is $31,000 for 2025. Now, if you're this is interesting, between the age of 60 and 63, you can put $34,750. There's an $11,250 catch up if you're between the ages of 60 and 63 in your 401k plan. So look, this is right when you're about to retire. We talk to a lot of people in this bracket at Max Out Savings Advisors. They say, hey, we're thinking of retiring in a year or two. They come in, they want to see how they're doing. A lot of times, look, we don't care if you retire or not. There's a lot of people, we tell them they should continue to work. And what's interesting, the reason we tell them that is because they like working, they're happy, they don't have anything to do after retirement. And I'm like, well, why do you need to quit? Maybe you should just take more vacation time off. Some of these guys got 4, 5, 6 weeks of vacation, or taking a 1-week vacation. I said, maybe you can work it out. But in that time frame, now you can put away in addition to your 23.5, you can put away $11,250 catch up. Just age 60, 61, 62, and 63. So that's a big change for 2025. Also, plans going forward are going to have, actually, as of 2022, it starts. It starts this year. You have to have auto enroll on your plans, which I think is a good thing. You want to automatically enroll people into a 401k. Some people just don't pay attention to it and don't worry about it. The best way to do is auto enroll it. Some of the money comes out. They don't even notice it's gone, and they can start saving money and understanding how to build up wealth. This is a great thing. Really fits into our save aggressively and invest conservatively idea. The other one, inherited IRAs. Remember, if you have an inherited IRA after 2020, you've inherited, you're going to have to remove all of the money within 10 years. If you inherit an IRA, come talk to us or talk to an advisor somewhere, because it takes some planning. Because if you got to take out big chunks of that, sometimes it's better to sit there and look at it and realize that, oh my gosh, I'm not maxing out my 401k. I might as well do that, and that way I won't get hit with the big tax hit from the IRA. Required minimum distribution in the inherited IRA. So if you, in the past, before 2020, we have most of our inherited stuff for some reason seems before 2020. We've had some recent ones, but the older ones, they take it out in their lifespan, maybe 3.5 years. Now you got to take out 10%. That's a big number. So understand if you need some help, go to our website, maxoutsavings.com, and actually you can schedule an appointment with us. If you have an IRA rollover, an old one, or you're retiring, we do that at Max Out Savings Advisors. We manage your money using our value investing approach and manage it through retirement. Just go to the website. You can sign up for a free consultation. I'm here in Houston, Texas. It's maxoutsavings.com. But at a minimum, sign up for the free newsletter. It comes out once a month. We can talk about more of the trends for 25 in our new newsletter, which is going to be out in a couple of weeks. It's completely free. We come up with some great stuff on retirement, understanding the world. It's the Max Out Savings. Go to maxoutsavings.com. And also, remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. Save aggressively, invest conservatively. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.